Well, hello and welcome to this week's update. Well, we certainly have a lot of economic news coming out. Very importantly, the Federal Reserve meeting starting this Tuesday and concluding on Wednesday, about an hour and a half before the market closes. So that will be very, very important to be able to see whether we are going to raise rates by 0.75% or by 1%. Now, my best educated guess, obviously no one knows, but my educated guess would be if they do raise rates, the Federal Reserve raise rates by 1%, I think the market will fall. If they raise rates by 0.75, we may see a small rally. That's my guess. So that is going to be important. And then obviously guidance as to what they're going to do going forward. So there's a lot of things here that could really change what the market does. I think they'll probably raise rates by 0.75, but again, no one knows. Now, there is earnings coming out this week, which will be very big for the market. Some very large companies like Google, for example, who is reporting earnings on the 26th as the market closes. So that is going to be, a large company like that is going to be very important to see good earnings from them. Amazon reporting earnings on the 28th as the market closes. So that's obviously going to be very important as well. Another large company. And then Meta actually reporting earnings on Wednesday, 5 minutes after the market closes. So three large companies reporting their earnings this week and next week. If they're positive, that's obviously going to help. Earnings so far hasn't been amazing, but hasn't been as bad as what a lot of people thought. So very interesting to see what's going to happen here. So, a lot of earnings coming out this week and next. Federal Reserve speaking this week. Very important about their views on the interest rates, how much they raise them, and what their guidance is going forward. Gross domestic product, the total economic output of the United States, that's going to be important. Consumer sentiment and consumer confidence, new home sales. It's going to be a big week. So we've got to wait and see what's going to happen here. So we don't want to get into too many new trades. The positions we've got on now are doing nicely. We don't need to jump into too much more. But if you did want to get into a new position, something that I'm looking at right now is TLT. We've got a left shoulder, a head, and a right shoulder here. So an inverse head and shoulders, which is a bullish charting pattern. Now, if it can break above 119.70, about 119.50, somewhere around there. If it can get above this pivot high and this pivot high, I think it could really come up and fill this gap right up here at around 128. So I think it could easily have that move. Now, if yields go down, the bonds will go up. So let's have a look at the 10-year yields. Now, this is important because, a lot of people are looking at the yields. They're directly related to mortgage rates, and this is certainly something that people will be looking at. Now, if you look at this, the 10-year yields here, we've got a left shoulder, head, and a right shoulder here. This is a head and shoulders, which is bearish, right? Inverse head and shoulders bullish. Head and shoulders like this is actually bearish, right? So we've got a bearish on the yields. If this breaks here, which is around the 100-day simple moving average, is the neckline, it could easily come down to around 2%. If that happens, then obviously you would start to see the bonds move higher here. So I'm looking at a very conservative position here that I'm looking to take on bonds. What I'm going to do is I'm actually going to set up a call debit spread where I'll sell the 125 call, buy the 120 all the way out to November. So not a short-term trade, long-term trade. 117 days from now, 18th of November 2022, I'll sell the 125 call, buy the 120 for a limit debit there of $1.74. You can maybe increase it up to $1.95. Potential upside is obviously, well, the maximum value would be $5, and we could potentially make 326. Set a stop at 74 cents, risking $100 to make 326. So it's an asymmetrical trade, and I like bonds to the upside long term, TLT. So that's definitely a trade that I'm looking at, a trade that we've got on right now with JP Morgan to the downside. If it does break the 50-day simple moving average, go above that, close above that on the daily, I'll exit that trade. But right now that's looking good. And our position, our very defensive position on Riot that we got into, we just needed to stay above $5. Right now it's above $7. If it does that, we're going to make over a 14% return in 40 days, 40 calendar days. So that trade is looking really good. We're situated very nicely right now, but we don't want to get into too many new trades, but that's a longer term position that I'm looking to get into on TLT. So let's wait and see. Let's see what the Federal Reserve does, and then we will start to leg into positions from there. All right, my friends, thank you very much for listening. Talk to you again next week. All the best, and bye for now.